Hi, winners. Look, welcome to Terry's Tips. Guys, listen, FICO 10 is here, y'all. Yes, get a notebook, get a pen, because y'all are freaking out, which is why I'm doing this video, guys. So my goal for this video is to simplify the process for you, help you understand how FICO 10 is going to impact you and your scores, and also, guys, to kind of dispel some myths, to kind of separate fact from fiction, because I'm hearing a whole bunch of nonsense. Got it, y'all? And if you are new, welcome, guys. Let me just say that I used to work for TransUnion. Boom, guys, I'm board certified, I'm credit score certified, guys. I have decades of experience, over 20 years. So I was doing this for the credit bureaus before social media, before YouTube, before all these influencers. I actually have a consulting firm, and my firm is built on financial literacy and wealth building, how to leverage your personal business credit to get income producing assets. I have a level of knowledge about credit and scores that you cannot buy. Subscribe if you want to learn more, guys. That's one reason why my videos sound very, very different than a lot of other people in my industry, is because I actually was doing this for thousands of people across the nation for the actual credit bureau, guys. Less than probably a dozen people in the nation have worked for an actual credit bureau and are in this space. So if you've never watched the video before, this is the video you want to watch from beginning to end, because I'm about to give you a ton of free information that is going to save your life. Okay, guys, and I'll do my nugget at the end. So let me jump right in. So FICO 10. So first, you're seeing all these videos about FICO 10 being here. Guys, FICO 10 has been here for a while. I did videos on it like a year ago, possibly even 2 years ago. So just know, I'm going to drop nuggets to the entire video, okay? So watch this all the way to the end. And actually, guys, I'm going to say for this video, not only watch it all the way through to the end and take notes, but send it to 10 people that you want to bless so they cannot panic and know what to do to raise their scores right now. Not now, right now. Okay, guys? So FICO 10 has been here. This is a nugget, your first nugget. FICO 10 has been here. It's been here for over a year, maybe even 2 years now. The reason why you're hearing more about it is because the lenders are starting to go from FICO 8 to FICO 9 and then possibly to FICO 10. But guys, what happens is, the reason why I haven't been hyping it up is because it takes a while for the lenders to actually adopt it. So even though FICO 10 may be available right now, you're not going to actually see lenders start to use it until maybe like another year or 2 years or 3 years, right? So do you want to prepare yourself? Absolutely. Do you want to know that it's coming? Absolutely. But do you need to freak out and be in panic? No, you don't. No matter what, even though there are variations in FICO 10 and FICO 10T, the same principles apply, guys. That means if you pay your bills on time, you don't have late payments, you don't have a bunch of negative information, collections, charge-off, repos, then you're going to have a higher score. But I'm going to break it all the way down. So first, why is this important to you? Guys, I'm making this video April 2022. In this climate that we're in now, I've never seen anything like it before in my life. I'm being honest with you guys. They check your credit for everything, for mortgages, for apartments, for jobs, for cell phones, for utilities, for cars, for credit cards, for loans, for businesses, for security clearances, for alarm systems. I've even seen them check credit now, guys, to put the solar panels on your house. They check your credit for everything. I've even had people invest in my services to help them because they weren't able to get a position or get like an actual for employment, but they weren't able to get a promotion in their position because they checked their credit. So guys, understand that it's super important, no matter what scoring model, to have your personal and business credit in order, because it's no longer just for buying things. Now they check it for everything, and it can essentially impact multiple areas of your life. Even utilities and cell phones, guys, okay? Oh, and I forgot life insurance and auto insurance. They check your credit for that now too. So understand that credit now more than ever is super important to all aspects of your life. Now, the next thing I'm going to say is about to blow your mind, because some of you guys are not aware of this. Guys, you have dozens of credit scores. Yes, y'all. So sometimes I ask you, well, what is your credit score? You're like, oh, I'm a 600, 650, I'm a 700, I'm a 720. Guys, always remember that when you yourself, this is a nugget, when you yourself, when the consumer pulls your credit report. It's only just a guide. That means you're using a service like Credit Check Total or Identity IQ or My FICO to get an idea of what your score is, but your true score is only calculated when the lender pulls, and it's going to be different based on the scoring model. It's going to be different based on the bureau, and it's going to be different based on the type of lender. Write that down. I'm teaching y'all some information, so let me give you an example. Some companies are either going to use one bureau, two bureaus, or all three, right? So mortgage lenders, a lot of times the big money, they'll do a tri-merge, which is TransUnion, Equifax, and Experian. Some of your smaller companies like credit unions, your regional banks, some of your retail cards, they may only check one bureau. So maybe you apply for credit and they only check TransUnion. You apply for credit, they only check Equifax. You apply for credit, they only check Experian. So nugget here to all of you. I always tell you when I educate you in videos for my course, Credit Leverage Lifestyle, when I do strategy sessions, I always make you guys do a tri-merge. Always know what your scores are for all three bureaus, no matter what. That way, no matter what you do, you're prepared. Got it, y'all? But the lenders themselves are only going to check one, two, or all three bureaus based on what their company policy is, okay? Now, the next nugget here, okay, guys, with FICO 10T and how it's going to impact you is that the lenders right now, they choose what scoring model they use. Period. That means you can't call up, like you can't apply for a Discover credit card and be like, hey, check my Equifax and use FICO 8. Hey, check my TransUnion and use FICO 9. No, the actual company, so the people you apply for credit with, they are either going to use FICO 8, FICO 9, FICO 5, FICO 3, FICO 10, right? It's up to the actual creditors. There isn't like a list where you can be like, because I know this question is coming. Hey, Terry, what lenders use FICO 8? Hey, Terry, what lenders use FICO 9? Hey, Terry. Y'all get the point? There's not a list where we can say, hey, these 20 companies use FICO 10 and these 20. No, guys, they actually choose what actual like scoring model that they actually are going to use, and it can change. So the lenders that you apply for credit with, they could be using FICO 2, 3, 4, 5, 6, 7, 8, 9, 10, right? So this is why you just want to, in general, get your stuff together, y'all. It's April 2022. Get it together now, okay? And let me just pause right here. If you need help, invest in Credit Leverage Lifestyle. That's where you think you learn a lot from my videos. My online course, I do live Q&A sessions in our Facebook group. I do workshops. I have lender, Zooms. It's ongoing support so you guys can get it together. It has equaled 5 and 6 and 7 figures for people. And guys, I'll put the link in the description, Credit Leverage Lifestyle. I just opened up intake for a limited time. I think it's gonna be open for like about a couple more days. All right, so if you need more help, I'm here to help you, and that's how you invest in help with our brand. All right, so you're going to have a different score based on the lender and based on the scoring model that they use. Now, another tip here that you guys need to be, I'm giving you guys some real stuff. This is Credit Scores 101, okay? What you need to know to get look good on paper, okay? To be able to leverage is that your score is going to be different based on the type of lender. The type of lender. So let me give you an example. If you apply for a mortgage, your score is going to be different as opposed to you applying for a credit card. If you apply for a personal loan, your score is going to be different than you applying for like, a retail card. If you apply for an auto loan, that's going to be different if you're trying to get like a line of credit. So why? Let me explain to you a little bit. What the lenders are looking for, the type of lenders are different. So for example, a mortgage lender is looking heavily at your debt to income ratio. They want to make sure before they give you this great big amount, you guys, that you have the capacity to pay it back. So they may rate debt to income ratio more than you having some other like negative things on your report or more than inquiries or something of that nature. Now you think about an auto lender. Say you had a repo previously. Well, they're about to rate you super, super horrible, right? Because they're looking at your whole credit picture, right? But they're also paying attention to your previous auto history. So if you had previous cars you paid off on time, you're going to have a higher auto credit score. If you had a previous repossession or late payments on auto loans, they're going to rate you even lower because the auto lender is looking at the full picture, but also heavily on your previous auto payment history. Got it, guys? So then like the credit card company, They're looking heavily at your inquiries and your payment history. They may not care so much about your debt to income ratio. So the takeaways from that is that you don't just have one score. Your score is going to vary based on the lender. It's going to be based on the type of lender. And it's also going to vary based on the scoring model that they use. Got it, y'all? Now, nugget right here. You can absolutely say you're about to apply for a personal loan with a credit union. You can absolutely call and say, hey, I want to know before I apply for this loan, what scoring model you use. And guess what? Good luck. Because a lot of times the actual reps and stuff have no idea. They just know that they use a FICO score. Okay. They don't know what model that they use, but a lot of times they will at least know the bureau. So they'll be able to say, well, we pull from Equifax, or we pull from Experian, or we pull from TransUnion, or we pull from all three. That may help you guys. Okay. Participate in your own rescue. Take accountability for some of this and know the approval criteria and your strong and weak reports. Let's say Equifax is your strongest score, no matter what, right? Based on just the general information you have, and you're applying for the personal loan. They say, we check Equifax. But you're like, yes, baby, that's my highest score. Let's go. Now, let's say Equifax is your lowest score. Equifax is the one where you've been doing disputes with all three bureaus, and the other two deleted that collection. The other two deleted those inquiries. The other two deleted that repo. Come on, somebody. I'm telling y'all some real stuff right here. But your Equifax report got all the collections, all the inquiries. It got all the negative stuff. And then the company is like, hey, we use Equifax. You're like, thank you. Come on, y'all. Literally, like, there's a couple of small things. That's why my course, I teach you guys high level strategy, right? This is where you can do a couple of things in advance to kind of help you have better outcomes. So you can pride yourself on knowing the approval criteria. Understand what you're rated on all three bureaus. And if you want to take it a step above, look, somebody say above, then you can actually reach out to lenders and say, which bureau do you use? And if it's one of your stronger reports, then go ahead and apply. If it's your worst report, maybe you're trying to see if another lender is a better fit for you. Got it, good guys. All right, now the biggest thing too, guys, with this FICO 10 thing, and let me just actually explain real quick FICO scores. Guys, there's FICO and Vantage scores. 98% of lenders use the FICO scoring model. So I recommend my FICO and I recommend Credit Check Total. I'll put the links in the descriptions. The reason why I recommend those two specifically, and mind you, I'm not affiliated with them, like I don't get any kickback. I literally, which probably I should reach out to them, but right now I don't. Okay, this is where because I always recommend them. They give you FICO scoring models. So when you're trying to be financially literate, when you're trying to leverage, when you're trying to build your empire, when you're trying to get the big money, which is what this channel is about, you, the consumer, you want to know what your FICO scores are so it can be a closer gauge as to what it is you're going to look like when the lender actually pulls. Don't look at Credit Karma. Don't look at Credit Sesame. Don't look at your Vantage scores. Pay attention to your FICO scores. All it is, guys, is a mathematical equation based on the information on your credit report. It is meant to assess the risk. Now, literally, this is why FICO 10T, 10 and 10T is out, guys, because listen to this, and this is about to be a little bit harder for y'all. That's why y'all got to get it in order now, and I mean that, is because it's their most comprehensive scoring model to date. Do y'all know what that means? That means they're not playing with y'all no more. Try them authorized accounts. Try them My Jeweler cards and all those things that I tell you guys not to do. They're not it. They're the most comprehensive scoring model ever made. So that means that this particular scoring model, FICO 10 and FICO 10T, is meant to really dig deep into to your financial literacy, how you pay your bills, and to giving the lender a better snapshot of the risk in lending to you. Guys, that's why the lenders use this. It's supposed to predict if you're going to default or pay the loan on time, right? So if you have a low credit score, you are a high risk to a lender. So they'll either deny you or give you crazy terms. The higher your score is, the lower risk you are to the lender, because when you have a high score, that means the scoring model predicts that you will pay the item back on time. So the lender feels more comfortable lending to you. That's all it is, guys. It's a mathematical equation. Nobody's trying to be mean to you. Nobody's trying to discriminate. It's just a mathematical equation. Guys, now with this 10T, because they've kind of like made it where they really assess the last 24 months, write that down. The FICO 10T is going to look heavily at the last 24 months. Now, why is that important to you? Guys, before you can have bad credit, do a couple little things, pay some bills on time, wait for it to update in 30 days and apply for things, right? And whatever your score was right then and there, that your scores will recalculate. The lender's like, oh, good, you're a 680, you're done. But not with 10T, guys. It's going to look at like the last 24 months. So that means if you've had bad credit, all of a sudden now you have good credit, it's not going to be playing with you. It's going to be like, because they had bad credit for a year and a half, and now they had good credit for 3 months. Like, I'm paraphrasing. I want you guys to get this. So this is why you need to be like looking at your credit now, because in a year or 2 years, more lenders are going to be using FICO 10 and FICO 10T, and they're going to be looking at what? The information, the activity that you're doing right now. Y'all, come on sometime. I'm trying to free somebody today. Okay, so you can no longer just have bad credit and do a couple of quick fixes. What do I always tell you guys? Do it the right way, one good time. I've been saying it since I created my channel. There's a reason why. Because I'm board certified and I'm credit score certified, we get information about industry news before it even hits the news, guys. I've been saying it for years now. But now more than ever, it's starting to trickle down where some lenders are going to start adopting it, okay? So now is the time you really need to get your credit and your finances in order, because no longer will the quick fixes work. Not trying to scare y'all. I put something out there. Look, Credit Lovers Lifestyle, so I can help you, okay? And so it's going to look at the last 24 months. So some things that you can do, right? They want to look at your balances over time decreasing. Remember that. You don't want to be maxed out, then all of a sudden pay everything down and now get a high credit score. That's how it kind of works right now. But now with FICO 10T, it's going to see that you guys were maxed out. Maybe you got, stimulus check or income tax refund or a settlement or whatever. You paid everything down. Your score is going to your utilization is going to go down. It's going to look a little bit better, but the FICO 10T is going to pick up on the fact that you've been maxed out and have bad credit for all this time. So work on systematically decreasing your balances, right? Don't have it be up and down, or always maxed out, and then you pay them off, and always maxed out, you pay them off. Like, look at systematically like decreasing your balances, increasing your actual utilization, your credit limits. That way your utilization ratios are lower, guys. And the same principles, do not believe all the hype. The same principles. Excessive inquiries are bad. Collections are bad. Repos and foreclosures and charge-offs and late payments are bad. Guys, don't overcomplicate this and do not feed into the hype. The biggest thing is that more lenders are going to start adopting it. It's super comprehensive. It's going to look at the last 24 months, and no longer can you do those quick fixes and be high on FICO 10 and FICO 10T. There's actually data that FICO put out there saying that, hey, if you use these new models, we can decrease the default 15%, 5%, 17% on what you're currently lending on. So guys, that's what banks want. They want to be able to know that if they give you a mortgage, give you an auto loan, give you a credit card, give you a line of credit, are you going to pay it back? And FICO 10 and 10T is saying, hey, we're going to give you a better snapshot of the actual applicant, which will help you make a better decision. Making a better decision means that you're going to pick people that are less likely to default, have less default on your items, which is going to increase the bank's bottom line by tens of thousands, probably millions, okay? So that's what this is all about. Two of the things I want you guys to do, guys, is put your bills on auto pay. Seriously, at least the minimum payment. Put your credit cards on auto pay. Put your mortgage on auto pay. Put your, car note on auto pay, okay? Like, guys, so that way some things that no matter what, they're just automatically coming out. You don't have to worry about them, right? Just have things on auto pay. And then the other thing I want to tell you guys to do is always check your reports with all three bureaus before you apply for credit. Before. So there's something you paid off, make sure it's a zero balance before you apply. If there's something supposed to be deleted, make sure it's removed before you actually apply. If you know some inquiries are supposed to come off, make sure they're actually off before you apply, guys. Last nugget, the most widely used models are FICO 8 and FICO 9 right now, right? You hit all three scores. Do not listen to these videos where you need to memorize FICO 5 is used for this, and FICO 2 is used for this. It's nonsense. Just work on being strong in the areas that matter, work on being financially literate, and do what you can now to prepare yourself. secure the credit that you need right now, right? Transition into business credit. And just doing those things, being financially literate, managing your debts better, paying attention to your credit, investing in health is going to give you the result that you need and the lifestyle that you want. Got it, good, guys. So guys, I hope that was helpful. I'll go back into the link in the description and I'll add the link for Credit Lovers Lifestyles. You can invest in some help. Okay, that's my nugget. Invest in some help. If you want different results, you need to do something different. Stop trying to be an expert. I'm an expert and I'll be more than happy to help you. But after you get the information, you need to execute. Okay, guys? I'll put in there the links for my FICO, which will give you all the different variations. I'll put the link for Credit Check Total, guys. And then, guys, just pull your reports. Start by pulling your reports, seeing where you are now, and make a plan, work the plan. Make a plan, work the plan. You got it? Subscribe, like, share, and have a super amazing day on purpose, guys.